Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and with me today is Amit Singhal, the Managing Director and CEO of Asian Paints, India's largest paint and decor company. Welcome to the show, Mr. Singhal. Fantastic set of results, 45% growth in net profit. The street is surprised and surprised positively. Take us through some of these numbers for the fourth quarter and also a recap of the full year.
Okay, great. Thank you for inviting me on the channel. I think it's been exhilarating quarter for us in terms of both the top line and bottom line, and I think the performances across businesses in terms of what we see. The overall volume growth is something which is very, very strong, which has kind of come in this quarter. If we look at the decorative sector, the volume growths are to the tune of about 16.2% in terms of what we have got, with a value growth of about 12.4%. And I think the bigger area has been that we have been able to expand our PBDIT margins very, very strongly, both quarter on quarter and year on year to that extent. And I think that is something which has given impetus to the higher PAT numbers in terms of what you are seeing coming to that extent. When we look at the market overall, the urban and the rural centers both have done quite well for us to that extent. And rural doing well has also added to the overall volume growths in a very, very strong manner to that extent in terms of what we have kind of registered today. So not only retail, but the B2B institutional segment has also done quite well for us and has kind of outstripped the growth in the retail, adding to the overall numbers in a very big way to that extent. The industrial growths, again, for a change, have been very, very strong. Both the auto industrial business as well as the general industrial business have done well, with very good kind of profitability coming in both the sectors. So I think overall, when we look at even the home decor segment, while the kitchen and bath business has not been so strong, but overall, I think the direction of home decor growing has kind of come about as a good success in the quarter. And therefore, we see that it is almost an all-round performance across, including our AP global operations, which is outside India to that extent, which has kind of given this kind of numbers coming at an overall PAT level and top level.
Mr. Singhal, do you expect this momentum to continue through the present year? There are some signs of softening or slightly lower demand in various categories. What's your own sense about this year?
So overall, when we look at the coming year, there are two, three factors which are becoming very, very strong. One, what we see is that the GDP predictions are in the range of 6 to 7%, definitely, which kind of really augurs well for the paint industry, because generally the paint industry has been speaking about 1.5 times the overall GDP growth to that extent. The second area is we have extended festival season this time. And festival definitely has a seasonality which is built into quarter two and quarter three to that extent. And therefore, we feel that given the longer festival season, it would kind of augur well from what we have done this year in quarter two and quarter three for the FY23 to that extent. And the other thing which we see is that we are looking at possibly the government spending and overall projects, institutional business also to be on a higher side, given the real estate and the construction uptick, which we are seeing in the market. So given these factors, I think the only upsetting factor which we see is possibly the El Nino, if it kind of hits very, very strongly and kind of really upsets the rural demand in some way to that extent as we kind of go ahead. But otherwise, I think all factors are looking quite good, and possibly we are looking at that this year should be definitely a double-digit volume growth as well as we kind of look at the year coming.
What's your sense about how raw material prices are likely to play out? There's been a good quarter for you, but in this year, what's your sense about raw material prices?
Overall, we've seen deflation in the raw material prices of about close to about 4% in quarter four. As we see it, the volatility in the environment continues. If you look at individual components of our raw materials, be it titanium dioxide, or it is solvents, or it is in terms of monomers, we are seeing different trajectories happening there, and it is not consistent that it is only following the crude route or the deflation route to that extent. Given this, we are estimating that possibly there could be in the first half of the year about a 2 to 3% inflation in terms of the raw material prices going forward, because the geopolitical situation is also not stabilized overall to that extent, and therefore possibly we would kind of really see that we are pegging it to about 2 to 3% in the first half of the year, and then possibly after in the second half there is further softening of raw material prices might pan out depending on how the overall geopolitical situation looks like going ahead.
That would work well. But a quick comment about the international business. In the quarter under review, there was a dip of 3%. Is that on account of what's happening globally?
So overall, if you look at there has been a lot of devaluation of currency in the international market. So if you look at Bangladesh, you look at Egypt, you look at Lanka, we have found that there is a lot of devaluation happening. In constant currency terms, it is in fact a growth of about 10% in terms of business overall. So that is why I would not peg the business going down. Overall, it has been quite good, especially Middle East and Africa for us has been pretty good in terms of what we have been seeing. I think it is the effect of the devaluation which you are seeing a dip with respect to the value numbers to that extent. But overall, I think business is in double digit of about 10% in constant currency terms.
And your strong brand certainly helps market access overseas. As we wind up this conversation, just a couple of further points. There are some brokerage reports which are talking about how the competitive intensity in the segment that you operate in is going to increase with new entrants into the space. What's your own sense about it?
So we have always maintained that this is an industry where competition has always been there. Even in the last 10-15 years, we have seen a lot of multinationals coming in, a lot of local players coming in who are in the infrastructure segment and so on and so forth to that extent. What we see is that overall, this industry has been growing at a good, strong rate in the last about 20 years. And we see that today, the size of the industry is about 70,000 to about 75,000 crores. And we are estimating next 5 years, it should kind of really hit 1 lakh crores overall as an industry size to that extent. And therefore, we feel that the industry is still very underpenetrated from a point of view of overall capita consumption as compared to Western markets. And then there is ample space for new competition to kind of come into that extent, because even if new competition comes in and takes a 2 or 3% share, which is the maximum which I feel they can take, I think it doesn't really upset the bandwagon overall to that extent. There could be some smaller companies and the unorganized sector which could kind of really get affected a little with some of these entries. But I think the larger organized players possibly would not kind of really get impacted too much as we kind of see in terms of looking at it, unless the new player comes with a disruption in some technology or some areas which we don't see possibly happening so easily as we kind of go ahead. So I think we are pretty confident that as we look at, there is enough space for competition, and possibly given the growth trajectory of the industry, I don't think so there is any large kind of movements which will happen in terms of the larger players getting affected in a very strong manner.
New entrants typically, like you said, can differentiate themselves on the basis of product or pricing or growth. Do you expect some sort of pricing-led competition, and how would that impact your own pricing strategy and outlook for the current?
So overall, what I feel is that obviously any competition which will come, I think pricing becomes one of the favorite strategies in terms of looking at what they want to kind of do. But as we look at the market, I think from a pricing point of view, today, existing players, which are smaller players, always offer a very, very high differential in terms of rates as compared to the organized sector to that extent. And therefore, we feel that even if new competition comes, they would be kind of really competing with the smaller players in the unorganized sector far more than really affecting the organized sector to that extent, which is there. But having said that, obviously, we are prepared in terms of saying that if there is going to be a minor kind of noise level with respect to pricing. I think today we are still kind of very clear that we are focused on overall growth, and we have so many sectors which we are working on. I don't think so that pricing alone could be a tool which can really disrupt the market.
Absolutely, Mr. Singhal. Thank you very much for your time with us today. Hope to catch you soon on the next set of numbers. Bye-bye.
Thank you so much.
If you like the video, do like, comment, share and subscribe.